Good afternoon and welcome to NYFP. Wall Street is holding on to session gains ahead of the Fed rate decision tomorrow. Joining me this afternoon is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon. Thanks for joining me today.
Good to be back.
Well, U.S. stocks are trading higher, and yet again, the Dow and S&P 500 are slowly approaching their record highs. We did get some mixed economic data releases out from the U.S. today, but all eyes are on tomorrow's data as well as the Fed. So what can we expect heading into the close?
Well, I think the market is probably going to have a plus day. You know, I don't see the market really having much of a jump here today, but we could perhaps maybe regain most of the losses that we had yesterday. Basically, we're in a holding pattern right now, a give and take before the Fed announcement tomorrow, and of course the big report of the month, which is the employment data this coming Friday.
And before we get to the Fed rate announcement, we also get GDP figures tomorrow morning and the ADP employment report. But it appears as though there are some economists, it seems as though the camp is 50-50 in terms of the timing of when the Fed could taper its bond buying program. But what are your expectations?
My expectations are probably at the end of the year, possibly December, or even in the first quarter of 2014. And I kind of suspect that this week's employment data might actually seal that, because this is probably the most crucial one in terms of the Fed making a decision in trimming, and when they will announce that. I don't believe that they will announce it tomorrow. I think, you know, the Fed statement is probably going to stay status quo. They'll just reiterate that it's going to be dependent on data, and that obviously there'll be no change in monetary policy. So I think there's a chance that they could do it in December. But I'm leaning more towards the first quarter of 2014. Again, a lot depends on this unemployment data. Now, I think we'll see non-farms grow by about 168,000, a slight tick in unemployment down to 7.5%. You know, the Fed has constantly reminded us of that 6.5–7% range, and so I kind of suspect that if the employment data continues to be consistent, that they're probably going to continue with the bond buying program until the end of the year.
And indeed, Peter, we'll have to keep an eye on the economic data that will be coming out this week, as well as what happens after the Fed meeting tomorrow. But we also have the ECB rate decision coming out on Thursday, and we can't forget about that. So what will you be watching for from the statement?
No, I don't think we're going to see any change in policy in terms of the ECB. And of course, I think, again, Mr. Draghi will be repetitious of what he's been saying all along. By the way, speaking about Europe, we've been getting some encouraging news lately. If you looked at the latest economic sentiment data that came out, it was the highest in almost 2.5 years. So things are beginning to show, beginning to improve slightly. But again, you know, the chances of the ECB or perhaps the Japanese bank reversing on stimulus programs at this time is next to nil.
Okay, Peter, well, thank you so much for joining me today. And when we talk on Friday afternoon, we'll know all about the economic data releases as well as the Fed. Thanks for joining me.
Indeed, we will.